It's time for Ask Mike Mondays. Mike answers one listener's question every week. Here's Michael Becker and Paul Peebles.
Welcome to Ask Mike Mondays. I'm your host, Paul Peebles, National Underwriter for Old Capital. And joining me today, as always, the man himself, the smartest guy in the room, Mr. Michael Becker. Michael, how are you?
Paul, doing pretty good. How are you?
I'm doing all right. What is the big plan for Thanksgiving? Are you? You've already spent 9 or 10 months with your family. Are you going to spend another weekend with your family, or are you going to go see friends or family?
Well, I've been out of the home confinement since I guess June. I started going back to the office, so it's been several. What is that? 4 or 5 months now. Geez, it feels pretty much like normal here in Texas for the most part. Not quite all the way there, but yeah, just going to get a house outside in the hill country, and another family and ours. We're going to go down and spend 4 or 5 nights down there. So looking forward to it.
You're actually going to rent a house down in the hill country, which is just absolutely gorgeous. It was right outside Austin, in kind of central Texas, rolling hills, absolutely gorgeous. That's going to be the Thanksgiving place.
That's it. Yeah, I got a nice fireplace and on a creek or river or something. So it should be photos look nice. So it'll be good to get out of Dallas for a little while.
That's great. That's good for you. So I always want to make sure everybody remembers that coming up shortly, another Old Capital speaker series coming up in December. We have a guy named Casey Conway coming in. Casey Conway is out of Atlanta. Going to just give us a little background about what's going on. He used to be with the Fed, and he is like the chief underwriter for CCIM. So that's kind of the commercial real estate group that has people working with them that are usually the smartest folks in the room. So great information coming from Casey Conway. Go to the Old Capital Podcast to RSVP for that. That's a great networking opportunity. Last 2 weeks ago, we had over 500 people registered for that. 500 people registered, and they networked for about 2 hours. It's difficult these days to go in person. As Michael Becker always says, people are not going to invest with you until they know, like, and trust you. And so we kind of created a platform for people to get together so they could build relationships. So go to the oldcapitalpodcast.com and then register for that event coming up the first week of December. If you do want to learn a little bit more about lending, Michael and I and James Zhang wrote about a 17-page white paper report talking a little bit about being that the lender brings in 75 to 80% of the money. We're your largest partner. How should you treat them? How should you be part of the team? And so the white paper report goes into great detail, kind of a checklist for you to understand a little bit about apartment lending. Again, it's a lot different from single family. Download that white paper report from the oldcapitalpodcast.com website. And if you do think that we bring value to you, you definitely want to, if you could, and we would appreciate that. We're trying to get 1,000 people to do a 5-star rating on iTunes and Stitcher before the end of the year. So make sure, if you can, go back to iTunes and give us a 5-star rating and maybe some comments. We would certainly appreciate that. So as you know, we asked Michael because he is an apartment operator. He operates lots and lots of apartment units throughout, let's say, the state of Texas. He has a concentration in Central Texas, out of the Austin area, a large concentration in the Dallas-Fort Worth area. He's been doing it for a long period of time. He's purchased over 10,000 units. But he came from being a banker, so he thinks like I do. I kind of try to think like he does. We kind of share notes, and that's the reason why we bring him in to Ask Mike Mondays. So a question from a listener that came in. It is, "Hi, Mike. I'm a fairly new operator. What's the best way to build a relationship with brokers now, especially that you can only speak with them on the phone?" That's question number one. And question number two is, how do you find those off-market deals, Mike?
First one first, I guess. I think maybe I would challenge the premise of the question. I think it's a little bit false premise. I don't think that you can only meet people over the phone anymore. I think people, at least in Texas, I don't know exactly where this person's coming out of, but people here are kind of out doing business. I mean, I'm Paul. How many brokers that you see on a regular basis walking properties? I mean, they're out and about, right? Is that kind of what you observe as well?
Last 4 months, everybody's masked up, especially in Texas, and whether it's Oklahoma or Florida or Atlanta, deals are getting done. I mean, there's no doubt about that. There's been more business done in the last 4 months than there has been in the last 9 months. And so, deals are getting done, and people are walking properties. They're walking into units these days. But everybody is definitely masked up.
Yeah,
So
but I think we could certainly start with the same premise of how do you get to know brokers. I mean, I think some of the easiest things you can do is certainly get on their distribution list and download their deal packages and underwrite the deals, and then call them up and talk through the potential investment opportunity with them. That's a good way, a good reason to be on the phone with them. And once you kind of establish a little bit of credibility, I mean, the thing you're gonna need to do, because I don't think anyone's awarding deals unless you physically go tour the property. I'm not aware of that going on in the marketplace unless you are, Paul. I mean, I think you still got to physically get on property, walk units, and when you go tour the deal, you typically have the broker there with you. So I think kind of the premise might be a little bit false, or at least not the practice here in Texas. I think obviously if you have some sort of issue and you're scared, or more worried than normal about, being exposed or something to COVID, I completely get it. But this is still, I think, a business that's hard to do 100% behind your computer at your desk, at your office. You actually got to get out and go meet people and network that way. So I think, I would strongly encourage you, if you're going to be serious about this business and want to actually get deals done, you're going to have to, if you don't live in the area, hop on an airplane and come into town and go tour some deals, because that's certainly going on. I was talking the other day, Paul, with Brian O'Boyle Sr. from Newmark. He's mentioning how they had a deal out that went through the full marketing process and had over 25 tours on it. So these deals are still being driven, still being toured, and business is still going on, at least in Texas for sure. I don't know if you have anything to add to that, Paul.
The only thing that I would add to it is really, before you go out and visit with these folks, build your team, build your lender, build your equity, the person who's going to, or persons that are going to be putting money into your transaction, build your attorney relationship, a contracts attorney, build an inspector who's going to inspect these properties for you, build your SEC attorney that is going to review all your PPM, their private placement memorandum. That's probably the most important thing before you start going out there. Everybody always wants to go out there to shake hands and say hello to everybody, and they want to get deals under contract, and then they try to assemble the team after they have a deal. And what I think that a lot of brokers don't want to have false starts, that they put a deal under contract and the broker hasn't done a lot of due diligence on you or vetted you enough, but they get you in there and now you're under contract. Now you're scrambling to knock all this stuff out. It would definitely help you if you had your team put together prior to going out there and shaking hands and setting expectations that you can get it done. Again, I just had a call today with one of our clients that they just got called back into a deal. So the deal was out in Dallas. The deal was fully marketed. A number of people had put LOIs out there, and they reduced that from maybe 10 to 3. And they were in the top 3. And that the person that was awarded the deal, they paid X amount of dollars. And the seller has been waiting for that guy to actually sign a contract. And it turns out that the buyer lost his equity, and he's just been sitting on that contract, not proceeding, not doing all the things that Michael Becker and his team do when they get under a contract of, they step on the gas and they go forward. Just sitting on this deal. And then the broker who arranged the transactions, had a serious talk and finds out that the money wasn't there to go forward, and there was no prospect to get more money in. And so now that broker's out looking for another group to buy the property, and they happen to call my group that we were going to bring money in to do the deal, and so that's how it's established. But if you don't have that group put together, right now, start working on that before you start going out shaking hands with folks. Anything more to add to that, Michael?
No, yeah, for sure. You got to get your ducks in a row before you start putting these deals, or start taking serious runs at the deals. One, I don't think it'd be very successful if there's other viable options out there. The brokers, especially if it's a deal of size with the reputable representation by a listing agent here and really anywhere across the country, they're going to make sure they vet the buyer pool for, it's not just about paying the highest price, it's about, certainty of execution. So they'll make sure that, they know who you are and do their best to kind of vet that you actually have the ability to take the deal down. So that's certainly, you won't have that unless you kind of build the team that Paul mentioned, build that team out ahead of time and make sure that you can communicate all that to the broker and the seller in the deal. But yeah, I think it's a misnomer that people aren't doing business, at least in Texas. People are out and about touring properties, meeting people. It's not quite the same, networking events and things are a little bit different from that standpoint. But getting on the list, setting around the deals, going and touring it, those are good ways to kind of start building those that relationship and that rapport, and working in through maybe some of your service providers or your vendors, like your mortgage broker, like a guy like Paul. I think Paul is certainly, I could know, many people that you felt, Paul, where they come to you, you kind of vet their financial ability and you kind of relay that to a listing agent. And then you kind of transfer the credibility from you, Paul, to your client. So that's also a good way to kind of get that credibility.
If you're a brand new person, Michael, and you haven't closed on a transaction, and you're just trying to kind of figure out what this whole thing business is all about, can you get an off-market deal? So let's kind of go to question number 2. Is it possible, if you're a brand new person, to try to get an off-market deal? What's your take, if that's truly an off-market deal, or what's your take on that?
I mean, anything's possible. It's improbable, I think, at least in the last, several years for sure, that it's going to be very difficult to get an off-market deal, or at least a deal that, isn't dramatically, flawed in some form or fashion, or, overpriced for sure. Those might be some deals you might see that maybe they'll take a shot on somebody. But I mean, if it's a viable deal.
And your first 5 deals, Michael, were any of those were off markets? I know that was a while ago.
Yes, actually, there were a handful of them, but that was a completely different environment, a different time, and we had some track record and a different form or fashion. I was able to leverage my relationships and reputation in the marketplace by being a lender in the area. And then my partner was working for a broker who had the Los Angeles area, and he had done several transactions. So we kind of had something a little bit different. So I guess why this was our first transaction, or handful, but we had some different experience and different level of relationships that most people probably coming in cold wouldn't just have. 1, and then 2, the environment is completely different. The deals were, a lot less attractive at the time. Seemingly, they didn't have as many people chasing them, and debt and equity a lot harder, and the prices were a lot lower, and we're just kind of coming out of the Great Recession, so the demand wasn't quite there. So they didn't have quite the buyer pool that is out in the marketplace today. So it was kind of more of the buyer's market, where for the last several years it's been much more of a seller's market, where you had a lot more demand than probably inventory out there. So in today's environment, I think it'd be very difficult to get an off-market deal. I mean, the off-market deals tend to come from, the source of where the broker's looking for somebody that they know can execute, they have a confidence relationship with. These brokers that are selling these deals, I mean, they get hundreds and hundreds of people, signing CAs on all their listings, and dozens and dozens of phone calls, I'm sure, every day, where people looking for deals. So when they have an opportunity, they typically go to the kind of the roster of people they know can actually get it done, especially if it's like a off-market deal. They only have like one shot. So, they have the seller said, okay, you bring me one buyer, and this is your only shot. They're certainly not going to go to somebody that's unproven or less proven than some of the alternatives. They're going to go to a guy that they know can actually get the deal done and do what they say they're going to do, and make their life a lot easier. And if you don't have a track record, you're not going to have likely the opportunity presented to you to even look at potentially buying it.
So I would imagine that in the C-class apartment buildings, there are brokers that only deal with the C-class apartment buildings. And then there's brokers that only deal with, say, the B-class apartment buildings. And that group is maybe sometimes different from the B-class. Or maybe it could be the same, but most of the time it's maybe different. And then there's brokers that handle like the A-class, the brand new properties, the institutional properties, the properties that have been built in the last, say, 1 year or 5 years ago. They're fairly brand new, but full of amenities on the property. And that's another group of brokers that sell that type of stuff. But Michael, when you start moving up classes from C to B to A, is it important to, be able to meet those folks again, and then also to how do you relay confidence that you actually can close? Because I've seen at least a couple of groups that are making the break to go from C all the way up to A, and the A people have never heard of them, but the C brokers know everything about them. What's your take on that?
Yeah, luckily a couple things. One, a lot of these big brokerage shops, some of them bifurcated were, a big shop like I'll use CBRE for example. They're a big shop here in town, and they're in, most major metros. But they have a team, so they have the teams that kind of focus on the workforce housing, and the teams that work on the brand new Class A institutional, and then there's some of the guys that kind of overlap, go up or go down a little bit, so kind of in the middle. So they all work in the office together and talk to each other. So usually if you've done a handful of deals in the C space, usually there's someone on the team that does the institutional. You could talk to your broker that you bought a deal or two from, and they can come kind of vouch for you and your ability to go up. But yeah, that was something I experienced where, we're going out and trying to buy a brand new, what are some of the newer, nicer buildings that we had. And, we bought, thousands and thousands of units. We go try to buy a nice new deal, and everyone's like, who the hell are you? You kind of came out of nowhere a little bit, and you had to go through and educate. But it's becoming a little bit more common, as you mentioned, Paul. You're seeing that some of your client rosters trading up. And I know you have a client right now that actually bought a deal for me. I think they bought their first deal for me several years ago. That was $6 or $7 million, and they're buying a $60-ish million deal right now. They've only done kind of workforce housing, and now they're buying a brand new deal from a developer. And so how do they navigate that? And it's probably like probably was like, yeah, who the hell are these people? I'd never heard of them. So I'm sure they got references within. I'm asking a question to you, Paul. Do they get references like within their shops? I know that's one of the big shops in town that is listing that property. They get a reference from the workforce housing group.
Yeah, without question, they had to get a reference from them to make sure that their workforce housing group within that company vouched for them, and that they were going to be able to execute. One of the things that Brian O'Boyle, who's a friend of ours, just kind of a guy who's been doing it since 1979. We featured him on the Old Capitol Conference and on the rocking chair panel. One of the things that he said, which I hold near and dear to my heart, is that when you're in your 20s, going into your 30s, that you have enough energy to handle some of these Class C value-added properties. And then when you go from your 30s going to the 40s, then you're moving up the curve and going up to these Class B properties that are fairly a little bit newer. And then when you get into the 50s and God forbid get into the 60s, you are at the A institutional property level. So just the level of energy that you have, the amount of different things against your stomach of how much you can put up with of Class C properties with stab block panels, flat roofs, with water ponding on the roof, to crushed sewer lines on the property, and how many times you're going to continue to put money into a value-added property that you're going to hold. So, if you're going to get into multifamily and you get into it in the 20s and 30s, stay in the Class C and work your way up. So by the time you hit the 50, 60 age range, you're at the A institutional level. And so last question I have, Michael, we talked a little bit about off-market deals. You guys recently closed a large transaction, and everybody likes to hear war stories and how people got these deals. Can you talk a little bit about how you guys did it and the success?
Yeah, we just bought a deal in town, and it was a pretty large transaction. It was 450 units and real prominent deal. It's called 5 Mockingbird. So it was a really large transaction. It was the largest of our career. And it was we bought it through 1031 exchange. It's relatively complicated. We had a little small property we owned kind of by ourselves just with our company, and then we had a 2-phase deal that was much larger deal that we were trying to sell for 2 years and finally got it done. And so we ended up merging together and doing a tenant in common or TIC structure. And this property, so we had a bunch of 1031 money going out shopping, and this property was being marketed, and we had just purchased another property from the same seller. It was a very large institutional seller. We bought a different property back in the summer, and we had that kind of same story, Paul, that we were just talking about. Come in and about 10,000 units in in Texas, and I come and try to buy the deal, and these guys didn't know who the hell I was because I wasn't another institution. So we had to educate them on this other deal, a smaller transaction, and we closed that deal in 6 weeks or something like that. Did everything we said we're going to do, and then this property is on the market, and we go have a joint closing dinner with the seller. And then at that dinner, I kind of told them, hey, I have intentions of buying the Mockingbird deal. And, they were kind of a little hesitant of trying to commit to anything or trying to go early. So, but, we had the deal kind of put together. I ran the debt out early on in the process. I knew exactly what my debt was going to be. And we came in pretty strong, kind of mid-marketing process, and kind of just hit the top of the range because we thought it was a pretty good price, and we ended up getting countered. But what I did was we showed, a material amount of hard earnest money. Actually ended up passing through a small portion of the earnest money as well to make sure I got their attention.
Yeah, when you say a serious amount, how big is a serious amount for Michael Becker?
7 figures, so $1 million hard, and we passed through 6 figures day one. So so I guess, Paul, what I was thinking, my thought process was really like the deal. We ran it out. We vetted a lot of the debt. So we had our equity basically lined up with the 1031. So my equity was solid. And then my debt, I felt really good about because we did a lot of upfront legwork and really kind of ran everything out and, talked through the appraiser who was going to appraise it and make sure we, kind of talked through Freddie Mac and make sure we understood, how they're going to look at it and size it. So we, really did a lot of upfront work. And the equity is lined up, and then the deal was in the middle of marketing, and I knew it was going to be a hotly sought after property because it was, really well located deal. And so I decided, I needed to get these guys to get their attention. I needed to, throw something out there that would kind of make them stop in the tracks because they were going through they had a plan, and I had to make them deviate from their plan. So if you put up a large amount of money, non-refundable day one, and you pass through money, which is really uncommon, those are two things that, I knew most of my other competitors in the situation wouldn't do, because this is a deal of size that the other competitors are most likely all institutional type buyers, and they just simply don't do it. So that's what I did. I just made sure that
because you were up against institutional buyers. How come these big institutional buyers would not put hard money or put money in for it to be exposed like you guys would?
That's typically something they just don't do. I mean, they have like committees at these properties and are the acquisitions team. I mean, they're employees of this large firm, and then they have to justify everything that they do. Then they have to go through, a process, and then they have to go up to investment committee, and then the investment committee has to, say, okay, yeah, we could put an LOI in, and then, the investment committee is going to be involved in all these decisions, and they have these different mandates because typically these big institutions also have big institutional investors themselves, like, teacher retirement funds and pensions and things like that invest alongside these other institutions. And so it's just layers upon layers of regulations, rules, and all these things they do before they put any money at risk. Where you get a cowboy like me, right, where you got a group that you got to put your own money up, that you, I guess you call us a little bit more entrepreneurial, and people that are like us, or probably most people listen to podcasts, kind of fall into the same category as us in some form or fashion, that we're putting our own money up, tying the deal up, and then we're betting that we can go out and raise the capital and get the qualify for the loan and actually close on the deal. So it's just a different level of risk tolerance. And, honestly, I think what's kind of been evolving in the marketplace is, groups like myself or your client that we were just talking about, they're actually, I would probably say, even preferred to go with a group like mine or that other group than kind of dealing with an institution, because we're just a heck of a lot easier to deal with. We're going to go a lot quicker, and we're willing to get non-refundable a lot earlier than our competitors are. So I think in a lot of ways, we're kind of beating these institutions out in a lot of these deals, just because they have, $2 billion fund. But if they're going to take 45 days to go non-refundable, and we'll go non-refundable in a week, that's pretty compelling.
That's pretty compelling to get the deal. So I am thinking that group that sold you the first property was pretty impressed. So they gave you the entrance to do the second deal. You closed that on time without retrading the deal on either one of them. So do you think we
closed this deal in 37 days, Paul? So from PSA to closing, so or Thanksgiving.
Wow, that's amazing. So do you think deal number 3, 4, and 5 are on their way coming from those guys?
That's the hope. So we'll see. They own a lot of stuff that I wanna own one day. So hopefully we can make something that makes sense at some form or fashion. So I know we're certainly should be in the most favored nation status, and we're gonna do another joint closing dinner. So maybe that's a little pro tip, that if you're buying from a group that you know that owns more assets that you want to buy from, maybe you should request when the deal is closed, do a joint closing dinner with the seller, which is a little atypical, but then that's a way for you to spend a couple hours breaking bed with somebody that owns a lot of assets you want to buy in the future. And this is a pretty simple business at the end of the day. It's not always easy, but people do business with they know, like, and trust. And so me spending a couple hours in the back room of Bob's Steakhouse got me a really large iconic deal in Dallas.
If somebody wanted to get more information, if everybody who is an investor that wanted to get more information from Michael Becker and his group at SPI, what's the best way for them to get a hold of you, Michael? And again, what do you...
Yeah, really the easiest way is just go to our website, which is www.spiadvisory.com. That's SPI like spy advisory.com. There's a contact us form, fill that out, and we're always happy to send out some information about potentially investing alongside of us. And that's really kind of what the focus really is, Paul, for going into 2021 as we're wrapping up 2020, just trying to put together, several larger high quality investment opportunities we'll go out and raise capital for. That's really kind of what the goal is. And, the interest rates are still pretty attractive here. The debt terms are, still pretty good. You're getting, low rates, and we're in a, tremendously business favored climate, and we're seeing a lot of population migration. So even as crazy as it sounds with, all the challenges out in the greater economy, the Texas economy and the multifamily economy specifically seem to be doing really, really well. So kind of think the winds are still at our sails, and will be for quite a while. So we're going to do our best to take advantage of this while we can.
And as you say, Texas is like Los Angeles back in the 1980s. So there's still a lot of opportunity out there. So great information from Michael Becker at SPI. We certainly do appreciate you spending some time with us. I'm Paul Peebles with Old Capital. Have a great day.